All right. Good morning, good afternoon, good evening to you, wherever you are in the world. Welcome to our Inner Circle Live session. I'm your host, Ryan Carthage. We'll be joined by my amazing partners, Casey and Vinny, a little bit later. I hope everybody is having a phenomenal morning or afternoon, depending on where you are. I apologize for the little delay. Logan decided that she wanted, so we've been doing homeschool with Logan for the past year and a half. And she decided that she wanted to go into school and be with her peers. So today is going to be her first day inside of the classroom. So it's an interesting morning as we're getting ready for that. So we're excited about it because she's excited. So we'll see how it goes. So we'll go ahead and get started. So as always, turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your microphone is muted unless you're actively asking a question or making a comment. All right. Quick disclaimer, trading does have risk. Trading does have risk, right? Trading the Forex market does have risk. Trading any financial instrument does have risk. We are not CTAs, which stands for Commodity Trading Advisors. So the information that we give is for educational purposes only. We can teach about the technicals. We can teach about the fundamentals. We can teach about everything all the way down to the trades that we like to take. But at the end of the day, it's up to you to press that button to take that trade. So always, 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 always remember to trade responsibly and never trade any money that you cannot afford to lose. All right. So we're going to hop in and get started. We're going to start out with just a quick chat for new folks that are joining us. We've had quite a few new folks over the past week to week and a half, and some folks that are within their first month with us. I want you guys to understand it's extremely, extremely, extremely important that you guys go through the training in the back office. It's extremely important. That training breaks down step by step everything that we do, explains to you why we do it the way that we do, breaks down the whole methodology piece by piece by piece. Okay. And we give you actionable steps to take. We give you actionable steps to take to implement this methodology into your everyday trading journey. Okay. It's not just something that you can think about and you have to put additional thought into how to practically use it. We give you the practical application in detail in that training. These live sessions, you see the whole piece, you see the whole picture, right? Each piece, support, resistance, trend lines, Fibonacci. We give you the whole piece during these live sessions, okay? That training breaks it down into its individual parts. And then when you come back to the training, you can then bring your questions that you may have from going through the training videos and implementing the information that we teach into your charting platform, right? Whether Smart Trader or TradingView. The implementation piece is extremely, extremely, extremely important. If you're not implementing each step as we teach it, you won't retain it, you won't see it, you won't feel it, and it won't start to make sense. At first, it's going to be confusing. You're not going to hear a lot of people tell you that. It's going to be confusing because you're learning something new. So at first, it's going to sound gibberish, right? If this is your first live session, what we talk about this morning might sound like gibberish to you. And that's okay. That is okay. You're learning a new skill. Learning a new skill takes time, it takes effort, and it takes energy. But the more you immerse yourself in the experience, the more you immerse yourself in the information, the better you become. Practice makes permanent and practice makes progress. Doesn't make perfection, but it makes progress. So you have to practice. You have to put in the time. Casey did a video yesterday in the Facebook group talking about keys to success. One of those keys is putting in the time. Putting in the time. So go through the videos, put in the time and marking up the charts as we teach it. If you do that, you'll see progress. If you do that, you'll see the growth. Things will start to come together. Trust me when I tell you, it takes time. Learning this new skill takes time. We're not going to tell you that you're going to get rich overnight. We're not going to tell you that you're going to get rich quick. But what we will tell you is if you stick with us and if you put in the time to learn the methodology that we're teaching, you'll see progress. But you have to put in the time. You have to put in the time. We have folks that have been with us for 4 months now, and the growth that they have seen is amazing. It's amazing. But they put in the time, the effort, and the energy to ensure that they are grasping the concepts. They've been through all of the videos. They show up every single morning and every single evening, every single Saturday, every single Monday. Right? So you got to take time to think about why you're doing this, right? Why do you want to do this? And it's bigger than money. You can do anything to make money, right? It's bigger than money. What's really going to drive you? What's really going to drive you to ensure that you grasp these skills, to ensure that you're working on the mindset portion of this journey, which is a major piece. What's going to drive you to get up every morning when you don't feel like it at 7 a.m. for folks on the East Coast and 4 a.m. for folks on the West Coast, lunchtime for folks in other countries? What's going to drive you to do that? Money isn't going to be that driver. It's only going to get you so far. So you really got to think about what is your purpose, your mission, your cause? What impact do you want to have in the world? And allow that to be your driver. Allow that to be your desire. So really, really think about that. But it's about putting in the time, the effort, and the energy into building yourself and learning a new skill, which takes time. So what we will do, as I switch over to my charts, if you guys have anything that you guys want me to take a look at, drop those pairs into the chat for me. I'm going to briefly go over, because we had some questions about, part of the reason that I wanted to have that chat is we had some questions about some folks not understanding how to practically utilize what we're teaching. So I wanted to really hone in on that. And what we're teaching you is the practical application, right? What we're giving you is the practical application. What we're giving you is what we use, myself, Casey, and Benny, on a daily basis. So it's the practical application. So we had some questions on that and some others that I wanted to really, really hone in on. So what I'm going to do is I'm going to slow down for a second. I'm going to show, right? As I said, we teach you the practical application. I'm going to show you, right, the sweet spots that we trade and why we trade it that way as we go through the pairs this morning. I want to take a look at some of the yen crosses We had some setups last night that were in a good space for us. So we'll take a look at some yen crosses, euro pound, CAD Swiss, Aussie yen, oil. Desi is killing it on. All right, so I'm going to switch over my screen. Benny, good morning, bro.
Good morning, sir. Good morning, everybody.
All right. So, Benny, we just had a brief chat about practical application of the skills that we teach, because some of the questions that came through over the past couple of days and in the Facebook group. So I wanted to chat with the team briefly about putting in the time, the effort, and the energy, and really going through the videos, because the videos teach step by step the practical application of the skill. You got anything to add to that?
Oh, no, sir. I mean, it's a must. You know, there's no way around it. No shortcutting it. You know, no shortcutting. If you want to learn how to do this on your own, right, and be your own indicator in that sense, right, and finding the setups for yourself, you have to go through it. You have to go through it. You have to get your reps in, just like we always say.
We'll do. Appreciate it, bro. All right, real quick from a fundamental perspective. So we had some light dollar news yesterday. Hold on one second, guy. Had some euro news, some dollar news. Governor Bailey spoke from the Bank of England yesterday. And then we had some FOMC members speak. And then last night we had the retail sales for the Aussie dollar, which was positive for the dollar, for the Aussie dollar. Today, Tuesday, later on today, Fed Chair Powell will testify. So that could always impact the market. So be aware of that. That's coming in at 10 o'clock. And then we have some other FOMC members speaking later this afternoon, which could also impact the market when talking about interest rates. Okay. Later on this week, we have some pound news, or more Bank of England speakers. Fed Powell speaks again, right? And then later on, tons of conferences today, this week, right? Unemployment claims. And then Friday is kind of the bigger day, right? GDP, core PCE, and then ISM manufacturing PMI. Okay, so got a decent amount of news this week that could impact the market in one direction or the other. So be aware of those times and those events, and click on these folders, right? Come here, click on the folder, read about these things, read about them, right? If you need more information, go to Google, go to YouTube, watch videos, right? Put in the extra work to really understand each of these pieces, okay? If you desire to have that in-depth knowledge of the information, okay?
Hey, Ryan.
Yes, sir.
Hey, just to add on what you're saying, for everybody to keep in mind, right? We trade the obvious setups, right? But don't be super anxious to get in a ton of trades, right? Take the ones. I mean, that's really should be the norm. But I'm saying it in this case because we are getting towards the end of the month, right? So just be aware of that. It's what is the day? The 28th, right? So we're getting towards the end of the month. We know that the markets could be kind of funny, right? People closing out profits and things like that. So just one more thing to be aware of.
Great call on that, bro. I appreciate it.
Yep, no problem.
Just copying down these pairs that just came in. So let's I'm gonna start with the yen crosses. We talked about, though, I posted a couple in the Telegram yesterday. Benny posted one or two as well. So let's take a look at it. So start with the Aussie yen. So for new folks, right? We trade three key areas, right? What we teach, we trade three key areas. So in this market, right, it moves in waves, right? Market moves in waves. You have extensions, you have retracements, and we utilize the Fibonacci to measure the retracement, the percent of the retracement, and where price could extend to, right? So we trade three key areas, okay? The market moves in waves. So this is your A, right? This is a swing. In this scenario, this would be a swing low, right? And this is your B. We call this the AB boundary. Once this AB boundary forms, you get a new fib to form, okay? This B boundary consists of a swing high, right? Two candles to the left, two candles to the right of a center high candle. This is a high probability U-turn point, right? A level of resistance. You can trade this, right? Counter trend trade for the retracement, because we know if we agree that market moves in waves, right, the market will find at some point a C, right? A retracement, a deep point, a pullback, okay? C. We teach, right? You can trade this B to C move, right? Because this is price action. The market is still moving, right? The second sweet spot that we teach, right, is between this 61.8 and this A boundary. And this is the second area that you can trade, right? So this would be your C to D extension, right? We say 61.8 and deeper for risk management purposes. These are high probability U-turn points, psychological levels that tons of folks in the market use, right? So we like to see a deeper pullback so that we can manage our risk appropriately and place our stop loss below the A. Okay, so you can trade this as well. A deep pullback, place your stop loss below the A, and trade the C to D move, right? That's the second sweet spot, right? 6-1-8, 7-8-6, 8-6 levels. The third sweet spot that we like to trade is sometimes you'll get a shallow retracement, less than a 23.6, and you'll get price to push up to this 118, 127 zone, okay? We call this an 80-20 scenario, right? When you see us post setups in the Telegram, you'll see 80-20. This is the scenario, right? Shallow retracement, price pushes up to this 118, 127 zone, right? 80% of the time, price will give us a deeper pullback, okay? 20% of the time, price will continue to this 1618 D extension level, right? But we like to trade this because this is another high probability U-turn point in the market, right? And it gives us opportunity to trade counter to the trend because we know that the market moves in waves, right? So it's going to pull back at some point, right? Even if it goes up to this D extension, right? It'll create a new AB boundary, right? After the swing high forms, and then we'll look for another C to form, right? So practical application of how to utilize the Fibonacci tool, right? Once the AB boundary forms, you can trade the counter trend move, B to C, 118, 127 zone, right? To the C, or you can trade the C to D extension, right? These levels, they're color coded, right? 38.2, 50, 61.8. These levels, right? they extend, right, to this 1618 level, right? Red to red. If you've watched Casey's videos, you've heard her talk about this, right? The deeper the retracement, we look at these as energy trampolines, right? The deeper the retracement, right, the shorter the extension. Okay, so the 786 level will go to this 118, 127. I mean, this 127 level, right? Blue to blue. If we get an 86 retracement, an even deeper retracement, price will go to this 118 level. Okay. So as price is moving, the AB boundary will be set. It won't change, right? The things that will change and float is your C and your D. Your C will float until you get a swing low, price to settle, and then start to move back in the direction of the market. And based on that retracement, your D will then be adjusted to the appropriate D extension, matching D extension level. Okay. So those are the three areas that we trade, right? That we teach. Practical application. Okay. So in that practical application, looking at the Aussie yen. Okay. So what we'll do is we will map our fibs from the top to the bottom on this, right? We're just going to look at this leg to the downside. Okay. Just going to look at this leg to the downside. Right. So we start at the top. This is our swing high, right? And we'll map our fibs down to the bottom, right? We see that we got, this is our active AB boundary here. Okay. We got a 786 retracement, didn't get to that 61.8 level. I mean, that 86 level, right? And then price started to push down. Price was not able to break out and push below that B boundary to extend to the extension level. So now we're getting a pullback here, which could tell us that the market is preparing to reverse. Didn't quite give us a true double bottom, right? But we got price to push down to a nice retracement level and then started to move back to the upside. So we want to find out what's happening right here. Okay. So we want to go down to our lower levels to find out what's happening here. Okay. So what we want to do, right? We know that this is the high point here. Okay. This is our last swing high in the move to the downside. So we're going to highlight this level. And we're going to take this down to the 1 hour chart. Okay. Take this down to the 1 hour chart. All right. And we can now start our fibs from this high. All right. We'll map them down. And we see, right, as price came down and then reversed, it took out this A. So when the A gets taken out, right, you just start in the other direction. So now we start from the bottom and we work our way back to the top. This is the active AB boundary on the 1 hour time frame. Okay. That's the active AB boundary on the 1 hour time frame. What we had was shallow retracement. Price pushed up to this 118, 127 zone. And what is it doing now? Reversing. Okay. So price is stalling again at this 23.6 retracement level, right? So now we could look for retracement and then a continuation deeper. All right. That's our Aussie yen. You can draw a trend line on there. See when you got that trend line break. All right. That's the outer trend line. And if you're being more aggressive, whoops, you would have had an inner trend line placed on this to identify that specific shift, which would have been like that. Okay. Actually, no. This candle is the highest point, so would have been like that. This was your trend line break here. Price is pushing down. Now, if you didn't take this trade in this 118 to 127 zone, right, what you can look for is a pullback. If you get a pullback and price to settle, right, potentially come back and retest the trend line, right? But if you get a pullback, look for a high price, and then you can enter this trade to the downside. Our TP levels on the fib are always going to be the same. TP1 is a 38.2 level. TP2, 61.8 level. TP3 is the A boundary. Like so. Okay. Practical application of utilizing the Fibonacci tool. Practical application. Any questions on the Aussie yen?
I have a question, Ryan.
Yo, what's up?
Could you could it be like pulling that last trend line down to that latest wick? I think that's how I had mine.
That's how you did it. Let's see. Mine is a little off. Let's see if that. So this would have been your second touch here. So technically, this was the trend line break right here.
Okay.
Yeah. Right. So you go one touch, two touch, and then just allow it to go all the way through. So you got an outer trend line break here, and now price is pulling back. So you could get a push up. So the only time you would adjust this one is if price was to pull back and create a higher high.
Okay.
Yeah. If price was to create a higher high, then you would adjust this to the outermost point, right? Because now you have a higher point to get to. Right. But seeing as this is your second touch of that trend line, right, as you're pulling it out, right, you want to find that second touch, which would have been there, and just move to the upside. So that's your trend line break.
Okay.
Yep. Good question. Any other questions?
Ryan, since we're getting the retest for the trend line break, why wouldn't we take it down instead of going up, waiting for the higher price?
Well, you want to wait for a pullback, right? So price could stop there and then continue to the downside, or price could give you a deeper pullback, right? And we talk about allowing price to pull higher. So if you want to take it off of that trend line retest, by all means, you absolutely can. Make sure that's written in your rules. But I would want a higher price, because if you take this trade here, right? If you take the trade here as your entry, your stop loss will be up here, right? Above the high, right? So now you got to.
Just to reward, okay.
Right, exactly, right? So 52 pip stop loss, as opposed to waiting for a deeper pullback, right? On the lower time frame, you could run a fib to see that, but I would want a deeper pullback into a 61.8 level for that entry. So now I can decrease that stop loss. That would be my entry. Now instead of 52 pips, I'm looking at a stop loss of 25 pips.
All right.
So
Thank
I would
you.
want that deeper pullback. But if it's in your rules to take the shallow pullback, by all means, right? But I would want a higher price so that my risk to reward is more in line with what I'm looking for.
And that stochastic is in the
Stochastic is in the buy zone as well. Yeah. So that's all indication that you could get a deeper pullback than just that. But again, if you write it into your rules that you take shallow retracements, right? Make sure you write it into the rules and make sure you calculate your risk accordingly.
Hey, Ryan.
What's up, bro?
Just to add, I forgot to add earlier before you keep going with the fundamentals. US 10-year bond yield is up through the roof. So that it kind of, going into yesterday, really didn't see the reaction that you thought you would see off the US dollar, being that the bond yields are up, but you're starting to see it now. So you look at that pound dollar, which covered later, but we can look at the pound dollar, the Euro USD, things like that. You can see that really playing out.
So talk us through, Benny, what that means. Bond yields are up. What impact generally do we see when that occurs?
Yeah, when you get US bond yields up, or any bond yields for a country for that matter, it's good. It's good for the country's currency. Because in order for investors to come in and buy the bonds, they have to exchange whatever currency they're using into US dollars. So right now, your bond yields are good rate, right? You're getting a good yield, which means you're getting a good return on your interest, right? So, and that's safer, okay, than the riskier assets in the stock market. So if an investor looks at it like, hey, long term, if I could get a great return, a great yield, right, on my money by putting my money into US bonds, I'll take that because that's more of a guarantee, right? So it's all about risk aversion, right? So if I can move some of my assets into US bonds and get that good return, then that's what I'm going to do. So if you look at a chart, like if you guys have trading view, things like that, you take a look at it. I think it's US 10Y. It's the symbol for the US bonds. And like if you go and you put on your chart like Euro USD and then you overlay the 10-year bond yield on it. I don't know what it is on Smart Trader, but if you look at like if you have a like trading view, and you put in the US 10Y as a comparison, and you'll see. So I know we're going over another pair, but I wanted to make sure I got that in because I totally forgot about that.
No, but that's a good point to bring up though.
Right. Yeah. So if you go like the Euro USD, for example, and then you compare it to and put in US 10Y.
It's on the daily.
There you go.
Gotcha.
Right. There it goes. There it was. Perfect. How you zoomed in. So you can see, and it's like, so which one follows the other? The dollar is going to follow the bond yield. Right.
Mm-hmm.
So bond yields for each country are very, 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 very important.
Appreciate that, bro.
Yep, you're welcome.
It's going to be something to study. Any questions on that? Anybody? No? All right. We'll do.
I noticed that UJ was piercing through the sky too. So
dollar yen?
Yeah. Is that reflecting that 10-year bond too?
Yep, your US dollar pairs, you'll see it. So if you look at like the pound dollar, right? You'll see that the pound dollar drop. So it gave you that pull back to the 382, went back and retested it, but this is why you're seeing that. So the market is starting to catch up. The market is starting to react to the increase in the bond yields. It's very, very powerful. That's why fundamentals matter.
Yep. All right. So on this dollar yen, right? Different scenario, but same thing. So we got, this is our, we want to start from the high on this, right? We've been watching this one's just been in sideways consolidation, right, through this point. And we were looking to see what price wanted to do if it break out of this consolidation. And we see that we got a break to the upside, right? Price came down to this. Let's shift this down. That would have been a support level. We got a new support level here. Okay. So price came back down, right? It was in this range, came back down to the bottom of the range, and then pushed back to the upside. So what we would want to do in this scenario, right, is highlight this low point and just look at this move to the upside. Okay, just look at this move here, because price, this is a strong impulsive move to the upside. So we want to see, okay, what's happening in that zone on the lower time frame. Okay, so now we can come here. We can come to this low point here, right? And see we got a nice double bottom here. Perfect double bottom, and price took off to the upside. So we can start our fib from this low right here, map it to the upside. And we see we got a 38.2 retracement. Price is pushing to the D extension. Okay, price is pushing to the D extension. So on this pair, what we'd want to see, because we got a 38.2 retracement, right? The matching D extension is a 1618 extension, right? So we'd want to see price come up, hit that D extension, create a new AB boundary, and then we can look for a retracement, right? And the AB boundary would look like that. Hypothetically, if that occurs, right? We'll look for that. Or shallow retracement, 118, 127 level, and then go, right? But price pushing high, right? Price taking off. So at some point, we'll get a retracement on this, right? We'll get a pullback. But the dollar is gaining that strength, as Benny just talked about. So we can either, right, if we're bulls on this, right, we can wait for that low price, wait for the pullback, and then look to buy to the upside. Or if you want to trade that counter trend move, you can trade that counter trend move back to support level, right? And then look for the buy to the upside. Okay. But in this scenario, I'd wait for the D extension to get hit. I'll wait for the D extension to get hit, and then look for the retracement from there. Question, where could we have seen the news on the US bonds? That was probably see that. See.
Yeah.
10-year bond yields. Trading economics. Okay. So in your back office, in the community, under topics, right? We have this section here, resource updates. If you go into this section, scroll down. July 17th, you'll see this list of links, right? These are all fundamental websites that we utilize to read, learn, understand. Behoove you to check some of these on a daily basis, right? Pick new topics to read about, but you'll also be able to get updates on what's happening in the market, right? Come here, save these links, take a look at them every day. Take a look at them every day. Okay. Any questions on the dollar yen?
I was gonna say, Ryan, that
Hey,
the retest to that would be the 61.8 too, so that would be a good confluence to look at.
say that again.
The retest to when we come back down to the 61.8, it'll be a retest. It looks like a retest to that
Retest
level.
to this consolidation zone and the support level. Yep. Yep. Definitely wait for that new fib to form though. Yep. We'd definitely like to see a new fib to form. And then, yeah, be looking for that. Absolutely. Right. And that's your level of support. Yep. Good call.
Ryan.
Fee, what's up?
Ryan, you're right. I've just heard you saying that. Is it always advisable to wait for the new fib to form?
When you're close to the D extension level, yes.
And when the extension is hit, is it better to wait then?
Yeah, you want to wait for that new B to form, because that will give you that swing high, right?
Okay.
That'll
Okay.
give you the swing high. If you don't have a swing high, price could continue pushing higher, right?
Okay.
So
Okay.
you
Thank
definitely
you.
want to wait for that new fib to form.
Okay. Cool.
Because if you get caught guessing and you guess wrong, right?
Yeah.
Then you're in a scenario that you didn't plan for. But if you get the new AB
Exactly.
boundary to form, now you have firm levels that you can work with. You know where you're placing your stop loss. You know where the 118 and 127 level will be. You know where your retracement levels are.
Okay. Thank you.
You're welcome. Would be nice for it to create a double top on the daily. Yeah.
Hey, Ryan.
Been what's up, man?
Hey, man. Just to add on what you were saying, like with the trading economics, guys, like when you wake up in the morning, right? I know a lot of people I know, they first thing they do is they click on that Facebook page. Just go to your trading economics, right? If you're serious about it, go to trading economics, see what the headlines are, right? You can go there, check interest rates, check bond yield prices, the whole nine, right? You can even set it up if you're using TradingView, right? Smart Trader, things like that. You can even set up like a market watch, right? And have the key things that you're looking for. We'll do some trainings on that, but just make sure when you wake up in the morning that you take a quick peek at what's going on, right? So that's just the 180 that I had to do early in the game, right? I wasn't gonna wake up looking to see what the Monday Night Football score was. I started to wake up and look at what was going on economically around the world, right? Because it's dealing with my money. So just something to really key in on and focus on and get in the habit of doing. Like make sure that you get up, check and see what's going on around the world before you crack open your laptop and start playing around with the technicals on the charts. Doesn't take long, 5-10 minutes.
Yeah, 100%. 100%. Any other questions? No? All right. So let's take a look at this CAD yen. This one we'll take a look at oil. Potentially, we may not have time, but we'll see how far we get. So on this CAD yen, right? CAD yen, right? This is our high here, right? So we're just going to look at this move to the downside. Okay, just going to look here. So we ran our fibs from the top to the bottom, and we see similar to the Aussie, right? Here we did get a true double bottom, and then price pushed to the upside. So now we're coming back into a level of resistance, right? A weekly resistance zone. And now we want to see how price is going to react at this high. Okay. So in order to do that, right, we got a double bottom, we got a shift in the momentum, we got stochastic pushing into the sell zone. So what we want to do is simply take a look at this last leg here, right? This last impulsive move to the upside. What's happening here on the lower time frame? Okay. What's happening here on the lower time frame? So we'll highlight that level, we'll go down to the 1 hour time frame, right? Take those out. And this is where we are, right? This is that second leg of that double bottom, okay? So what I did was I mapped my fib from the low point, from the lowest point, not in the middle, right? Start from the lowest point and map the fibs up to the top, right? And what we see once we zoom in, right? Active AB boundary here, shallow retracement. We never got a break of the trend line. Price pushed up to the 118, 127 zone, right? And now price is trying to break that trend line, right? It's getting a rejection now. We'll see how it responds, okay? But 80-20 scenario. We got stochastic is down in the buy zone here, right? So we could see price push higher and come to this resistance level, right, to retest it. And then we'll see if we get that trend line break and price to start making its way to the downside. Okay. But 80-20 scenario, shallow retracement, 118 to 127 zone, potentially see some consolidation, maybe a push a little higher, and then the move to the downside. Okay. This is the CAD yen. Any questions on this one? No? All right. So with the dollar gaining strength, right? Potentially, you'll see the yen start to pick up a little strength as well, in most cases, right? Because the yen is a safe haven currency. So we could see some yen strength, be it temporarily, right? But we could see some yen strength in some of these retracements, right? So that's why you could be seeing some of that, because a lot of times the yen moves similar to the dollar. Okay, so we'll see if we get this follow through here on this CAD yen. Oil has been in a nice push to the upside, right? Regaining some of the momentum that it lost, right? So that one has been predominantly driving this pair, but we could start to see some weakness. So we'll watch this one and we'll see, right? If we get a push higher and then the trend line break, or if we get just kind of a double top scenario here, right? Right in this 118 to 127 zone, maybe doesn't give us a new high and then gives us that break to the downside. Okay, but be patient on it, allow it to do what it's going to do. If you trade the zones with a wider stop loss, right? You're in that 118, 127 zone, pull the trigger, right? If you want to wait for your confirmations, you want to wait for a nice, strong, bearish break of this trend line. Okay, if price gives you a new high, right, similar to what we just talked about, then we would shift this trend line to the outermost point, right? If it gives you a new high. Currently, that's our spot, and price is kind of just hovering at this trend line right now. So we want a nice bearish break if you're playing your confirmations. Okay, nice bearish break of the trend line, and then you can look for your potential entries to continue to the downside. Okay. Any questions here? No. All right, cool deal. Euro yen. All right, this is one we've been tracking. Okay, take this out, right? So take this out, right? So again, right, start at our highest point and just track the impulsive move to the downside. Okay, this is our swing high. This is our active AB boundary here. So we got AB boundary formed. We got a 6-to-1-8 retracement. And price has been trying to make its way to this D extension level, but has struggled to break through this weekly support. Struggled to break through the weekly support. We got a nice double bottom formation here on the daily time frame, and then price took off to the upside. Looks familiar, right? So again, just look at, right, this last impulsive leg, right? Keep it simple. Keep it simple. Look at this last impulsive leg to the upside, right? Stochastic is pushing into that buy zone. Into the sell zone, not quite there yet, right? So you can see we still got some upward pressure there, right? But we want to see what's happening on the lower time frame. So we'll take this point, take it down to the lower time frame. Now, right, this is that low point, and then again we mapped our fibs to the upside. this is one of the scenarios where we could potentially see this shallow retracement, 20% of the time, right? Shallow retracement. We could see the D extension get hit on that shallow retracement, right? We'll get a new fib to form, and then we'll play it accordingly. Okay. But this is still in that space. Never really gave us a strong bearish break, right? The price has just been pushing to the upside, right? You got some breaks there, but immediately reversed, okay? So this is our active trend line there. Price is trying to push up, potentially get to that D extension level, right? Could be trying to get to this resistance level. So we'll see, right? So on this one, I would like to see this D extension get hit and then a new AB boundary form. And then we play our levels from there. Okay. Like so. Okay. That's where we are on the euro yen. Still 80-20 scenario, but this could be one that gets that D extension before we get a reversal. Any questions on this one? No? Okay. Pound yen. Okay, we've been tracking this into the downside for quite some time. Yeah, nice setups on the horizon for sure. For sure, right? We've been tracking this into the downside for quite some time, right? But same thing, right? Start at our swing high and just work our way to the downside. This has been the most recent move, okay? So this is our active AB boundary on the daily time frame. We got a 6-1-8 retracement, double top, price pushed down, and it's just been consolidating in the zone, okay? So now we're at the top of this range, and we see prices rejecting again off of this trend line to the downside, right? We drew a trend line from the top of this move down, okay? We got a strong rejection off of that, okay? We said last week that we wanted to see price come back to the top of this range, and then we'll see what happens, okay? And that's where we are. We're at the top of the range now. So again, same thing, right? We want to see what's happening on the lower time frame. So we'll take the last impulsive leg. We've been in a range, right? So if we're playing just the range, we can look at top of the range and play it to the bottom, right? But let's highlight this lowest point, right? This last impulsive move, strong impulsive candles to the upside. And we'll take this down, maybe. There we go. To the lower time frame. Down to the lower time frame, right? Just tracking this move to the upside, okay? Just tracking the move to the upside. So we start a fib at this low, okay? Smart fib tool, the lowest point, and map it up. What happened there? Hold on. There we go. That's an AB boundary there. Okay. We see shallow retracement. Price pushed up 118, 127, came up to hit that trend line, right? And then fell back to the downside. So now we're in movement, right? This 80-20 play, pushing to the downside. Okay. We're breaking back below this level of resistance, right? So what we could see and what we could wait for, right? Price to settle wherever it will, and then wait for that pullback if you're not already in this play. Okay. If you're not already in this play, wait for price to come down, create a swing low, and then give you a pullback, right? You don't want to jump in. You don't want to jump in now while price is moving, right? You want to wait for a high price. You want to wait for a high price. Awesome. Awesome, done that. Right? You want to wait for a high price. So swing low, pull back, wait for that pullback to happen, right? Some of our advanced folks, right? You can take your fib once the swing low forms, right? And map that fib and wait for that pullback to occur, right? Wait for the pullback to occur back to the sweet spot. And then we can look to, if you're already in it, you can add to the trade at that point, right? If you're not in it, that could be an entry opportunity for you, right? Have a wider stop loss, right? Wait for that 61.8, 60 pip stop loss, right? 2-to-1 play to TP1, right? If we get that 61.8 retracement, okay? If you get that 61.8 retracement, that 61.8 level is right in line with this previous consolidation zone, right? So we could see that. Bang. Bang. Right? Then it move to the downside. Come back to retest that zone that it broke out of. Okay. There you have it. So that was already on the move. Wait for the pullback. Wait for the pullback. Wait for the high price. Vince, you got a question, man?
No, I don't. I'm following.
Cool. Any questions on this pair?
Hey, Ryan.
Ben, what's up, man?
It's gonna be interesting to see when the market opens today. The stock exchange. You got bonds up, bond yields up. Like you got some strength in the yen. So it'd be interesting to see what the sentiment is today. Risk on, risk off.
Yeah, it will for sure.
Right. So you just start to put the pieces of the puzzle together, kind of figure out what's going on. So it'll be when New York opens, we'll see.
100%. 100%. Definitely agree with you. Definitely agree with you. All right. I'm not going to be able to get to all of the pairs today, because I do have to get Logan to school here shortly. But I'll take a look at the euro pound real quick before we call it a wrap. Euro pound. So this has been one that's been all over the place. Consolidation, right? Just sideways movement. Saturday, we looked at it and said, there's easier moves to, easier pairs to trade, right? So if we just break this down to its simplest form, okay, we'll move all of that and we'll just look at, right, this level of support here, right? We got a nice move to the upside, then it's kind of just been back and forth, right? We're pushing to the top of the range now, but it's our AB boundary on the daily time frame from your level of support. Your stochastic is in the sell zone currently. So we got a little bit of, they call this divergence, right? Price is moving in the opposite direction of the indicator there, okay? So we'll drop down and see what's happening on the lower time frame. So we'll take this lowest point here, right? This is a level of support. It's a level of support. Okay. And we'll drop down to our 1 hour time frame. Link that down, and we'll take that. Maybe. Hold up 1 second. We'll just go to the 1 hour time frame. We'll find that point. I'm not able to click it at the moment. It'll be this level right here. This is that low point. Okay, this is that low point. Last touch of that support. So we'll map our fib from the bottom to the top. This is our AB boundary, right? We ended up getting a 8-6 retracement, didn't take out the A. Then we see over the past couple hours, price has just been moving crazy to the upside. So with this 8-6 retracement, right, the extension level is right here. Okay, so on this pair, we'll wait for that level to get hit and we'll see what happens, right? It'll be at the top of the range. Okay, it'll be at the top of the range, stochastic in the sell zone. So when we get that new AB boundary to form, to be this low to that high, then we can take a look to see. Okay, but the move to the downside, if you played it, right, got a 38.2, price stalled at that 118, 127 zone, and then just fell to the downside. So now we're getting this push back up. So we'll wait. That's the D extension level. Okay, so we'll wait for that to get hit and a new AB boundary to form. Okay. So wait for that level to get hit. Yeah, it did move. It did move. Surprisingly, that's a really, really strong move to the upside. So we'll see how that goes. Yeah, and generally when you get these impulsive moves like this, right, the market likes to take back a portion of that move. So once that new AB boundary forms, right, once that AB boundary forms, and that after that D extension gets hit, right, we can look for a retracement. Okay, so wait for that D extension to get hit and the new AB boundary to form. Be patient, be patient, be patient. This is a funny mover sometimes. So,
hey Ryan.
Yo.
So, right again, just reading the news and the fundamentals. You got pound sterling hit by market sell-off, energy crisis cited. The British pound was sold against the euro and the dollar. Global investors dumped stocks and high-yielding assets in the face of increasing fears that inflation was heading higher for a protracted period amidst a global energy crisis. So there you go.
There you go.
I'll put this in the chat. This is another site that I follow that we can add, just specifically relating to the pound.
Sweet. There you go. That explains it, right? So with that being said, it could be a scenario where, right, just because it sounds like there's going to be some momentum here, right? Strong push, right? Once this new AB boundary forms, wherever that is, we could only see a shallow retracement and then price to push. So we'll see. But there you have it, right? That was the fundamental catalyst to get this thing moving in a direction. But it also happened at a key fib level. Plays out, man. We didn't get through a lot of pairs today, but I think the conversation was vital, especially for our new folks. And I wanted to ensure that, especially new folks, you saw practical application of everything that we teach, right? We're not just giving it to you just roundabout wherever it goes. Our goal is to take out all the extra fluff and give it to you exactly how we use it. And this is exactly how we use it. Exactly how we use it. Practical application. All right. Any questions on any of the pairs that we covered this morning? Benny, I'll shoot you this list. I know you have a plan for this evening, but if you can cover some of these, that'd be great.
Awesome. Thanks, man.
Appreciate you. Any questions on anything that we covered this morning? No? Ben, you got anything for a closeout, bro?
No, thank you. That was good.
You're welcome.
Yep. No, sir, man. Just continue to work hard. Pay attention to the fundamentals, right? The information's out there. Just added another site in the chat that's specifically relating to the pound. So just do your due diligence.
Thank you guys so much. It's the best. This is the best training I've ever received in my entire life. You guys are so good. That's all I can say.
Thank you, Fee. We appreciate you.
Yeah, really,
appreciate
you're doing really good for us. the amount of explanation that you guys are doing is phenomenal. No words can express how I'm feeling when I'm joining you guys. I thank you.
Thank you very much. Thank you for being a part of the team. We really appreciate you as well.
Absolutely.
Thank you.
Absolutely.
Thank you.
Absolutely.
Have a good day.
All right, everybody. You guys have a phenomenal day. Ben will be on tonight, 9 p.m. Eastern Standard Time, right? And we'll get looking at some more charts, look at some more fundamentals, and see what happened throughout the day. All right. You guys have a phenomenal day, and we will chat with you tonight at 9 p.m.